Very, 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 very good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Budget 2021 is set around few days from now, and our beloved media already started talking about the budget. I understand that majority of the people are only concerning about the tax slabs. But having said that, considering the coronavirus impact, considering the fact that the whole globe is having deep negative impact from coronavirus, I strongly doubt whether government is really in a position to offer any tax benefit at least this time. Especially when the fiscal deficit is more or less outside the range, and in the last year the government borrows around 12 trillion INR. And I am not sure, but maybe the government would continue to have the similar borrowings this year as well, because tax is definitely a big concern for the government, and government need to honor this concern, and the only way to honor the concern is definitely the you know no tax cut or probably the sovereign borrowings. Some public comments suggested that government might be looking for sovereign borrowing. By the way, sovereign borrowing means that the government of India will borrow outside the country in dollar terms. There are multiple ways of sovereign borrowing, and I'm sure that if RBI is intelligent enough, RBI can handle that, but I doubt. So, when the budget will come, I will definitely not focus on the tax slab and all these things. I have made myself very clear that I'm going to be focusing on three things. Number one, I would like to have the complete computation of the fiscal deficit, which includes center, state, and total. This is my first point of concern because this impacts exports, imports, tariff policies, and more importantly, it impacts the Indian rupee. That is more important, to be honest. Number two, and very important thing I would be focusing about is the borrowings program. In borrowings, I would like to understand how much government would be borrowing throughout the year, whether it would be same 12 trillion or it would be more. Important thing I would like to see in this budget is that borrowing is divided into two parts this time, which is the local one and the foreign one. And in case it is foreign one, then how much? That I need to see what is the tenure and what is the QSD. By the way, QSD stands at quality spread differential. According to my estimation, India credit rating is triple B minus and the quality spread differential will not be less than 200 pips. Whether India would be borrowing over LIBOR, that is another thing, because LIBOR is set to phase out in June 2021, which precisely means around 3 to 4 months from the budget, the LIBOR would be phased out. So the government needs to borrow on SOFR, which is secured overnight financing rate. That is more important. So let me show this to you, a brief introduction. Government is having two ways of sovereign borrowing. Now, one way of sovereign borrowing, the government can go for the liability route, or government can go for investment route. You must be thinking why I'm referring liability and the investment route. That's very important. If the government will go for liability route, then government will go this way, provided an intelligent banker make them understand that. If government will go for investment route, then government will go this way. But let me be very honest that this is not suggestible. The reason is this is costly. According to Goldman and various other investment banks, Japanese yen prediction for 2021 is around 100, and I think they are not far. Considering the mess which is happening in the Japanese economy, I see Japanese yen might be turning up 98, 99, maybe lesser than that, to be honest. This is the route. Plus, we need to understand very importantly the periodicity. Number two, we need to understand is the QSD, quality spread differential. And number three, which is very important, is government is going to be taking LIBOR or government is taking SOFR, which is secured overnight financing rate. I'm sure that if the government is going ahead with LIBOR, then this is a big mistake they would be doing. They should go ahead with the SOFR, which is secured overnight financing rate. Now, my third and very important point to discuss is the comment by the government on disinvestment. Now, every passing day, there are variety of corporates, the government companies news which is coming in public domain. Like one of the companies who is currently in the radar is Hindustan Aeronautic Limited because of the some big contract. Government also made it clear that Shipping Corporation of India is subject to disinvestment. Government is trying very hard for BPCL, Bharat Petroleum Corporation, Bharat Petroleum Corporation. Today, the GAIL India is coming up with a buyback of the offer. And of course, this name, Air India. We are really not sure whether government would be able to do all of them together or not, but we really need to wait and watch. Government has changed a lot of guidelines for the public sector concern in which they made their share price in a little better way. They asked them to buy back their share and more things they actually changed. Very important for me is the banks, basically the public sector banks, and which bank to be, I would say, disinvest. Now, I would like to explain my feeling about disinvestment. There are two ways disinvestment would happen. Number one, offer for sale route. Now you have any company, take it recently Steel Authority of India. Government is selling some stake because government is the main promoter, and the institutional investors or maybe somebody else is coming and they are buying that stake. Offer for sale. This is also very important because eventually slowly government would be able to sell the stake and institutional investors might come. God knows qualified institutional buyers can also come at a given period of time. Another is, and that is really very important, is the 100% exit route, which is called disinvestment, which means like Bharat Petroleum Corporation Limited, which like Air India. Maybe I am not sure, the few public sector banks as well. Now, in this, what happens? The government to quit the 100% stake in these kind of situations. My question to you, my question in my research is that who would be the buyer? Whether the buyer would be a corporate who is into the similar business. Example, with due respect, Vedanta. Vedanta bidded for BPCL. There is a lot of hype that created in the market about Vedanta. But I raised a very concern, which is, by the way, where did Vedanta get the money? Because Vedanta already facing the cash flows issue. If as an organization you are facing the cash flow issue, how come you can bid it to buy around 58,000 crore BPCL? That's more important. Another important thing I need to see is whether the global players will come and buy, whether the private equity or venture capitalists will show their interest, and more importantly, the big conglomerates in India like Reliance and all, whether they've showed their interest in that. And last but not the least, very importantly, interest by the foreign institutional investors. Now the question is that if the government would be doing selling 100% stake, then government loves to sell to one party rather than to multiple parties. So we really need to wait and watch. Now another important thing is that, which I am doing research and I'm concerned, to be honest, is that, example, government selling BPCL, government selling PSU bond, PSU bank, any PSU bank. I would be looking at this PSU bank portfolio is an ideal match for Indian banks. This PSU bank portfolio is ideal match for foreign bank. Or this PSU bank portfolio is ideal match for institutional investors. This can only possible provided you will do the detailed study of the balance sheet of the PSU banks. I did detailed study of the balance sheet of the PSU banks, and I think that few PSU banks are here, few PSU banks are here, and few PSU banks are here. By the way, non-performing asset issue is there, which is with the almost all PSU bank. So I really doubt whether any PSU bank is there to whom we do not have a kind of situation. Almost all PSU banks are having the same kind of situation, to be honest. My point here is that, and that is very important point, which I really love to raise, is that in case in the disinvest, and that by the way I am working, I'm not done with my research. If any disinvestment company will held by, assuming, foreign institutional investor, then what is the probability of second offering IPO? Which means that once the foreign institutional, assuming this is the PSU, foreign institutional investors got that PSU. There are 3 foreign institutional investors who got that together, 1, 2, and 3. After 1 year, 2 year, he said, I quit. What they do, they will do very simple exercise, which is known as offer for sale. They sell their and they will go. You can also mention this as FPO because Air India is not listed, so Air India will go for IPO. BPCL is listed, BPCL will go for FPO. So there are different ways of handling it. To conclude this video, I strongly feel that I don't know how the government, in which way the government would be answering my questions. Number one, the fiscal deficit. Number two, definitely the borrowings. And number three is definitely the disinvestment. As we speak, government already raised 40 years funding, which means that this funding is raised in 2020 and to be matured in 2060. 40 years funding with a coupon of around 6.8%. That is really a competitive price government got. In disinvestment, I would love to see from all different angles. Number one, from the angle of institutional investors, pension fund, balance sheet, non-performing asset, and all. I know that retail investors finding it difficult to understand, but there is so much news which is coming from disinvestment, from the angle of disinvestment. So it is better you read this news very carefully and then you take up a call how to handle this. The complete research and due diligence is required because budget is, I think, 10-15 days away from here, and I think we have the sufficient time to get the research done. But having said that, if government will go for a sovereign borrowing this time, I'm not sure whether government will go ahead or not. This would be a sudden change in the policy, and some pieces good, some pieces not. Let it be honest. This is Rahul Magan from Treasury Consulting Group. Our details is shared at the last part of the video. Have a great time ahead. Thank you so much.